So far in 2019, stocks have been kind of copacetic, I guess you could say. We're seeing a little red today, and we're also seeing Jonathan Corpina for the first time in 2019. So let's welcome him. Hello, Jonathan.
It's a little too late for me to say Happy New Year, but thank you.
You know what? Chinese New Year is coming up, so we could say that. And speaking of Chinese New Year, look at the red on the screen. I got to hit you with this question first. The IMF lowered the global guidance forecast. What do you think was the main reason behind that? And is that why we're lower today?
I think that is the reason why we are lower. Yes, there are many headlines that are out there. We're focusing, continually on what's coming out of Washington, what's coming out of China, what's coming out of Davos. But I think right now, if we're going to singularly focus on one thing, yes, it's that IMF number. I think globally, everyone's concerned about tariffs and how that is going to affect global economies. There's so much uncertainty. We've talked about this now for months back and forth as to the ripple effects of that and how that affects individual companies, how that affects consumers, and how that expands the global economy. So right now, I think the safest bet, keeping cards close to your chest, is to be concerned about slowing down of global economy due to tariffs.
We have a lot of companies that are correlated with these China trade negotiations. We have manufacturers reporting this week. We have chip makers reporting this week. Is this earnings going to be a more downbeat than usual?
Yeah, I don't know if it's downbeat. I think it's going to be realistic, right? I mean, Apple was the first company that came out and outwardly mentioned and said, we are concerned about global slowdown due to tariffs. Every company has been talking about that within their boardrooms. Apple was the first one to actually publicly come out and say that. And I think there was a huge sigh of relief from many companies going, okay, now we can talk about the big elephant in the room. So now they are going to use that opportunity, and they'd be foolish not to use that opportunity now to say, due to the fact of the unknowns of tariffs and how that's going to affect global economies, yes, we are concerned about our growth and how that's going to trickle down to us and our consumers.
Any sectors on the safe side, by the way, maybe like healthcare?
I think with so much uncertainty as to what's going on, I don't think any real sector can be safe right now, right? I mean, yes, everything is cyclical and affected differently, but I think you might not get hit with the first wave of tariff implications, but down the road, you most certainly will. So I don't think there's really any one sector that can be safe right now.
You mentioned Davos, which President Trump is not there right now. Theresa May is not there right now, and Macron is not there either because everyone's dealing with their own drama in each other country. We're dealing with our government shutdown here. Is that going to affect the economy at all for the first quarter?
Yeah, you know what? I think our shutdown is clearly going to have effects overall, even from just investor sentiment. I think that's a big thing where we're sitting here watching, the government continually shut down, the bickering back and forth. This large conference in Davos. Yes, we do get information out there, some very good insight, but I think when we reel it all back in, it really, for us, it's going to focus on what's happening in Washington. Hopefully, something gets done sooner than later in that, but I did say that a few weeks ago.
You sure did. I mean, listen, you called it all along, Jonathan. Now, one more thing. We love your levels. Are you watching anything specifically in the S&P 500?
The levels are interesting. We broke through that 2,600 level in the S&P, which was more of a psychological one. And if you go back, 2 weeks ago, that was a real reach that was out there. This pullback that we're seeing now today, currently trading at 2644. Okay to see this pullback. It's kind of healthy for our markets to kind of flush out this upswing that we've seen in the last two markets. I think if we could stay above 26.25 on the short-term basis, I think that would be helpful.
All right, 26.25. Jonathan, Happy New Year. Why not? Nice to see you and hope to see you next week.
Thank you. Always a pleasure.